Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Wednesday, February 9th, 2022. I'm going to cover in this order. We're going to look at the NASDAQ 100 and two stocks I want to really focus on there, and or just touch upon, I should say, and that's Facebook and Netflix. But of course, we'll take a look at the Qs and see where they're at. I want to do an update on Bitcoin, and then also gold, silver, the dollar, and the euro. Just a quick overview because I've updated those recently. I'm not going to go into detail on any one thing unless I haven't talked on it in a while. Updates on natural gas and quite a few other commodities: cocoa, sugar, coffee, lean hogs, and cotton. So those are all things that have been brought up in the last couple weeks as potential trade ideas. Other than coffee, actually, I just want to note some developments. I haven't updated coffee in a while. All right, let's talk about what's going on today. And what we have here is there's that trading range. I'm going to turn off all these annotations for a second, zoom in on the chart so you can see it. So yesterday I focused on this recent period of sideways consolidation, those four candles, 4 days of trading. This is a daily chart, and we popped to the upside. And the upside, what it is, we enter the gap. So when you look at it, there's the gap right there. We opened down on, I believe it was the top of the body of that candle right there, and the top of the gap would be where we closed the previous day, which is right here. So quite often, not always, but quite often when a gap's entered, it's backfilled. So that would be a natural target, be the top of the gap. But we'll see where we go. I'm going to show you some other things as well, some other levels to watch that could cap the rally before then. But as of now, it's just keep in mind we're up 1.67% right now in the Qs, and that is just par for the course. The ATR, average true range, goes up during a correction, and that's what we've seen. So this is the new norm. Daily swings of 3% or more are more than common and have been lately, and will be for a while until we're out of correction mode, most likely. All right, so that is what we had today. We gapped up into the gap. Again, there's the gap right there. And so you have also another test. I wanted to point out one other thing. You have another test of the 200-day moving averages. Let me turn those up for you so you can see them clear in the video. There's the 200 simple moving average and the 200-day exponential moving average. And so we had a test and a rejection right here recently. We took them out there. There was the point where we took out the 200s right here. Went down, came up for a back test, had a rejection, and we're back testing again. We're right between the 200 simple and the 200 exponential. For example, if you look back here during the big Q4 2018 drop, which was a very comparable or similar correction, excuse me, you had the 200s taken out right here at this point. You dropped down and you came in for a back test, just like the recent one. You shot a little bit above there for a day and then back down, came back up again, tested it. We were checked at the 200 simple. And the following day, another rejection off the 200-day exponential, and that was it. And we went down for the next leg down. And once we recovered both 200s, then it was back off to the races, bull trend, and then you're back into buy the dips, buy pullbacks to the 200s. But again, when you're below the 200s, when the market's below the 200s, that is in a precarious technical posture, and it is bearish, considered bearish, until and unless those MAs are recovered, clearly recovered, not just a single day or 2 days. Sometimes it takes a week or so, and so that's where we're at again. Back here, currently testing the 200s from below. Okay, and a big part of that today, certainly playing into it, has to do with Facebook. So the other day, under this post here on the February 4th Bitcoin and FANG analysis, I made a reply, but the reply I made just a couple days ago here, right here, yesterday. And so my reply here, well, zoom in, or you can check it out there. It's Facebook. Facebook has hit major support. In fact, it's very similar to what we have with what we did the other day when I threw out a long trade idea on Netflix for a bounce trading opportunity. So overall, Facebook, the chart looks like death. What's happened to it recently, and where it is longer term. But I went on to say, although it's finally coming up on the next big support zone, which is 216 to 222, so I expect it will likely consolidate or bounce here for a bit unless the broad market just completely craps out. And we've also seen Apple and the rest of the FANGs steadily seen their post-earnings gains. A lot of those gains have been faded, and I went on to say that reeks of institutional distribution. But once again, what I continue to say, we need to see the recent lows get taken out with conviction to sharply increase the odds of my next downside targets being hit. So now let's look at Facebook real quick. Okay, this is Facebook, and we're on a weekly chart, weekly time frame. And so what I'll point out here, this is here's that major support zone I'm referring to. You can see it there, 216 up to about 222, 223, and that is defined by some major reaction highs. You have a big, well, I'd say major reaction high because it was important, it was significant, it was an all-time high with a very impulsive rejection. It was a divergent high, and it led to a 44% drop. So that's why I defined that as a major reaction high. Likewise, that was a major reaction high because it was followed by close to that, probably a 30-something odd, easily 30-something odd percent drop off that one. Also a divergent high. And so that sets those up as very significant reaction highs. Then you broke it out. There's that big green candle. That's a breakout. That's what you want to see. It's impulsive. Followed by 1, 2, 3, 4, back tested for about a week, and then off to the races, never looked back. So this was extremely bullish when those two previous reaction highs were get taken out. So I would be surprised. I wouldn't use the word shocked, but I would use the word surprised if the buyers didn't at least step in there for a little bit, and that's why I said I expected a little bounce and consolidation around that level. And you can see we hit it. That was again yesterday, and today we hit the bottom of that level, 216, almost to the button. There it is on the daily chart, the low. So the buyers are stepping in, and this is causing a big part of the lift in the NASDAQ 100 today, 4%. And I will say I'm sorry I didn't post that publicly, that comment section. I do encourage you guys to go and read that. I should have mentioned that because the reason is this looks just like the Netflix setup, and right here. So I'm going to flip over. So again, that's the Facebook weekly chart. And if you rewind just a few weeks ago, same thing right after earnings. Netflix fell to my a long-term support level that I had, and it's a very similar support level. This is why I wanted to highlight these two. Look at that reaction high. That reaction high was a divergent high, a beautiful little bearish rising wedge pattern. And I talked about we shorted Netflix there. That was a 43% drop. We shorted it each and every time it was highlighted when it hit my golden shorting line right there. So we gamed first that one. We waited till it came back, covered, and a lot of shorting ops there. You can see big drops measured well into the double digits. So to scale 1 to 10, that's up there as far as resistance goes. Hit it again here, reject. So you can see again, that is technical analysis 101. A blind man could see that resistance level looking at the charts. It's so obvious. And so that's where we came in, and we had a lot of downside momentum. So we had a brief intra-week momentum-fueled overshoot, only to close right back on that support level right there. And that was the bounce that I talked about in Netflix. But then when we got close enough here a couple weeks ago, I said I would suggest taking profits because you're close enough. And I think we even hit it closer to that level, that 475 resistance level. And again, it was about a 20% gain. And that's what I said. If you make 20% a week, take the money and run. You're close enough to support, and boom, rejected. So where I'm going, I'm comparing similarities. Netflix was just ahead, and it wasn't random. It was not a random earnings-induced drop that came out of nowhere. It was certainly priced in the charts. We were building divergence for a long time. Then the primary trend line broke, and then earnings, and it just crapped out. But when you look at it from this weekly perspective, it looks to me, and I think we'll see this with Facebook, this is flagging type action. Nothing goes down forever. You have a very impulsive drop, or you had one in Netflix, and that is very indicative of a flagpole I keep talking about these bullish and bearish, right now, lately, mostly bearish bear flag patterns, bearish pennants and flags. And why? Because they are continuation patterns. So if I'm going off the thesis that, or the theory that we are in a downtrend with much more downside to come, but we're just in a counter trend bounce phase, which it appears to be. The market's QQQ hitting my first target on the weekly chart and daily chart. Then you would look to trade this, or at least watch. Even if you're not trading Netflix, it's still a big, crowd favorite, so to speak. It's not one of the top components anymore of the NASDAQ 100, at least not the top 5, but it's up there. It ranks up there. So that would could likely take the stock down, and I'd have to give you, this line is so old, and this line's back from 2018. So what I would do is give you another line. I would say right about here. You see a major reaction low right there, and let's just measure that out real quick. There's our flagpole. Let me draw it this way so I can duplicate the line. Flagpole down, length of the whole drop from the impulsive drop down to right there, and take this, add it on to the top of the flag, and look at that, puts us right there, right at what my price support would be. And so again, does that guarantee it's going to happen? No. And the thing about it too is, watch. Even if you want to short it, right now you're still above major support. You just hit it. And we already had that thrust up. Maybe we get another one. Maybe that's the end. Maybe that's this. Even right now is going to prove to be one of the best buying opportunities in decades for Netflix. Or we do this. I think we do this. But of course, it hasn't happened yet. So you watch for that. And what you want to watch for is an impulsive move down out of the flag, and then obviously a break of the recent lows. And this is what it looks like on the daily chart. It's not a perfect flag. It shows a little better on that weekly chart. Now back to Facebook. So again, I just wanted to show you the similarities that I see with this impulsive move down to almost the same, a very comparable support level around the same time with those reaction highs in Facebook as well. And maybe this is flagging action, maybe not. But I could tell, again, we hit major support. How long it bounces for, I don't know. This is a pretty decent reversal so far today, but and maybe it's over. However, when I look at the daily chart, come down here, what I see is this is big resistance. It was major support, and we gapped right below it. And that's one reason I said the chart looks like death. So again, nothing goes down forever. We're extremely oversold. The dip buyers just, are probably cross-eyed crazy at this point, especially now that they see the slide at least has a brief pause to it. So, they're stepping in as they should, again, because it's that support. And, if I was a long-term bull on the market and Facebook, I'd be buying with both fists here. And it's certainly a tradable bounce. And how much farther? That would be from where we're at now. If we come back to that level, 240, about 246 level, be about another almost 7% potential upside. So that may happen. Maybe not. I don't know. We'll watch it. But again, let's see if it consolidates for a little bit, maybe for the next week or so, a little more. Another candle or two here might give us that bear flag, similar to what we have working potentially there on Netflix. And that would take us down. If so, that would take us down to my next target here, about 170. I didn't measure it, but I can just eyeball it. That'd be roughly the measured move there. So that is Facebook. That's what's going on now. That's what's helping the market today. And I already gave you potential bounce targets real quick. NASDAQ 100 NQ futures, you have a potential. Again, I'm going to put an asterisk by it. Potential downtrend line I just added here. Why is it a potential trend line? Because we only have 1, 2 reaction points. This is just me. In my rules, a trend line needs 3 distinct reactions at minimum to validate it, because any 2 points can be connected at random. We almost hit that one, but didn't quite hit it. So if we can get a reversal here, then you have a potential downtrend line forming. If not, you still have major resistance right here at that 50% fib that we got rejected off the other day, and price resistance, and that will probably come in roughly with that gap I showed you. But again, in a downtrend, you want to short the rips and cover on the dips, or again just hold on. So I don't know if coin toss odds if we're going to get there. Honestly, I just don't know. Swing wise and trend wise, longer term, nothing's changed. If you're short the market, the NQs, I see no reason to be concerned at this point. If we start going up and we start taking out key resistance levels and keep Fibonacci retracement levels, yeah, then that starts to take away some of the check marks for the bullish case and give check marks. I'm sorry, take away check marks for the bearish case. But as of now, that's not what's happening. We're just bouncing right off that support right here. That recent consolidation, the bottom or the top of that recent consolidation there. We checked it there, bounced, had a couple bounces, and that's where we're at. So we'll watch this. If we get a rejection, then the trend line will be validated with a distinct reaction. On ES, the S&P 500, same thing. In fact, I'll give you one better. So we have a potential trend line right here. This is a 2-hour candle chart, 6 months price history. So it starts right off the all-time highs with a distinct reaction there. So there's 1, 2, and this is still a question mark. We haven't had a reaction yet. If we do, it'd be even nicer. I'll be honest, if we could just equal this. Things don't have to be perfect in technical analysis, but technically speaking, if we can match that previous high, which we're just a hair below right now, we're going to have, or we will have, negative divergence. If we can match it and get a reversal, because again, in my book, this is what I call, we do have potential divergence, but number one, you need to match that previous high. We'll say right now, for all intents and purposes, we're close enough, but what we do need is to have the PPO and RSI turn back down, because they're momentum indicators. They're turning up. So if they turn back down, give me a bearish crossover below these previous highs, any about where we're at now, which would validate that trend line, or a hair above it, we now have the first 60-minute divergent high on the S&P 500 futures since back here, and that's you can see what happened back then. It was a nice shorting up. We had one there, we had one there, we had one there. So that's what I'm looking at here on the again 2-hour candle chart. Oh, and just to get back to the 60-minute charts on QQQ and SPY, see, you could get there if you come up a little bit more and we get a backfill of the gap or a little shoot above it, come back, test that 50% fib again, and it happens soon. You still have the potential for negative divergence on QQQ as well, and of course on the 60-minute chart of SPY right here, same thing. There's that we're almost at that previous reaction high, with the indicators lagging behind. So you got that 60-minute divergence I love to see, and I believe this certainly has the potential to be the catalyst for the drop on the next leg down. So that is it on the markets. Keep an eye on Facebook, Netflix, and really, of course, the indexes themselves. Alrighty, let's move on. I'm going to run through these quickly because I got a lot to cover. Let's go to Bitcoin. BRR, Bitcoin futures. Let me cue it up here if I can find it. There it is. Bitcoin futures. All right. So this is a 60-minute chart, hourly candlesticks. We had a downtrend line there was taken out. I'm going to show you the daily chart here in a second, but there was a resistance level about 41,383. I believe this was covered recently, and this resistance zone 44,598. We'll call that 44,600 up to about 45,578 right there. That's a big level. We hit that the other day with negative divergence. Nice little bearish rising wedge on the 60-minute chart. Had a pullback off that level, and like I said, I'd still put coin toss odds. I told you the other day I'd give it coin toss odds whether or not we're going to take one more leg down in Bitcoin before it has a more lasting rally. Okay, and just to recap the Bitcoin futures, the daily chart, you had there's that same downtrend line, or the primary downtrend line. Pretty good support there, about 35,466, which we just hit and held after several more than a week or so of testing it, and then you also have as big, if not bigger, I think even more significant support below about 3361, and so this is resistance we just ran into. So I think we either get a rejection, come on down, and again, I like that better. for a a swing or even a trend position in Bitcoin. Because if if it happens soon, you're going to have that bullish divergence I talked about. So that's a potential scenario. Kind of looking ahead, trying to read the tea leaves. Maybe that's it. Maybe that was the end of the pullback. But again, I'm kind of leaning this way. I'd say over 50%, a little better than coin toss odds. We're going to get that. Alrighty, next up. Natural gas looks like it's about to potentially offer us a long entry here. Remember this line back here, this yellow line, was a very significant resistance level. I highlighted we had a basing pattern there with positive divergence, and then we took it out right there. We went on, had a quick pop. It was a pretty profitable trade. It was a quick, what is that, better than better than about 10, right about 10%, maybe a little bit more. Pulled back. So it's still a level because you had a reaction there. We tested it successfully, rejected, and then finally broke out above it there. So, and we're getting very, very close. I think you could, it would be an aggressive position now because natural gas is in a powerful downtrend. We put in a big divergent high recently. I'm on an hourly chart, by the way, 3 months. And so it's been correcting, took out the trend line. But here's what you have. A couple things to watch. If you want to play it safe, wait for a break above the trend line. You can step in there. You can step in now. We're close enough. You have a bullish falling wedge right there with positive divergence and some decent support. It's possible we keep going down. Remember, these are momentum indicators and they haven't crossed up yet. So if they keep going down, you could burn through the divergence, and then each of these are support levels on the way down. Probably the biggest one would be about here, 662, because you had that big reaction low right there. But either way, this one's getting ripe for a reversal and a pop. At the very least, a quick trade back up to one of these two former, well, there were levels back then. That's a big level, 445 right there. So 445.2 is the actual level I have it on. So it's just a trade setup for you. And what else do I have? CC, Cocoa. This is the hourly chart right here. You have, I pointed out recently, I believe I highlighted this one as a short here on that break of the rising wedge and the divergent high right there. See our negative divergence? And it did start to correct. We pushed up, made a marginal new high, but we've only extended the divergence. So no guarantees, but last time we had negative divergence, you got that. Time before that, you got that. Then you got that, and then that. Likewise, you look for these divergent lows, and you go long. Ideally, we don't have a clean up trend line anymore, so I had to add this line right here. This will be your new uptrend line. Sometimes you have a little minor trend line that breaks, right? Then you have a quick drop, marginal new high, and then you break the secondary trend line. That's what happened right here. There was your primary trend line. This was almost identical. You had negative divergence right here up to that point. You broke, and then you pushed up, made a marginal new high that extended the divergence like that, and then took out the secondary trend line, and that's all she wrote. And in the essence of time for the video, I'm just going over the futures. If you're going to trade cocoa, NIB is your ETN. Sugar, we've had been highlighting this one for a couple months now at least. These patterns I picked up on using the RSI. You have a magic level up here. I call it about 86, 275 on the RSI is overbought, with oversold being about 20, just a hair above the 20 level. And so if you can time, ideally the best trades are, my sell signals come with just high level bearish PPO crossovers, but if you can align it with tags, anytime you get up to that level, that usually does the trick. You had at least that initial pullback on that first tag, then you put in negative divergence. All the better when you get divergence on the this is the 2-hour period chart. So again, the whites are buy levels. You buy down to this point, buy, 1, 2, 3, 4, buy. We didn't quite get there, so this one's not as strong, but we did have a little bit of divergence right here recently, and you did hit it. You hit the buy on the RSI right there down to the 20 level, and so far it's been moving up, and it took out the this trend line recently, and it's at that first target right now. So that's sugar. What do I have next for you? Coffee. I haven't updated coffee in a little while. I've kind of been standing on the sidelines. That I noticed a triangle the other day that broke out. Let me find that for you. KC are your coffee futures, and this was a triangle. So you had a clean downtrend line there, a nice uptrend line right there, and these triangles act like coiled springs with energy, and then boom, there was a breakout. So I'm pointing it out after the fact. My apologies. If you're in it, this is what's going on with coffee, and I don't see any negative divergence. Coffee can run when it wants to run. Personally, I wouldn't chase right now. Just wanted to mention the breakout, and that's what's going on with coffee. If you're in it or watching it or long term, I'm still a long term bullish on all these commodities. We're in a bull market. Every time you get these divergent highs, I point them out, especially in the last few months. They've been more conducive to swing trading than trend trading. But you get these divergent highs, there's your sell signal that was probably pointed on the site. Then you had a bullish falling wedge. I believe that was pointed out. You've had an uptrend line. So it's a very tradable vehicle by pullbacks to the uptrend line. And that's another reason I'm showing you this chart. We'll see if we get another pullback to the uptrend line. And JO is your ETN if you prefer to trade ETNs. LE, that would be lean hogs. Let's see. All right, I'm sorry, live cattle. Lean hogs are HE or lean hogs. This is live cattle. You had this level here. The magic number on the RSI seems to be about 73,219. When you get there, it tells you, hey, we're overbought. You're going to get corrections. Tap, 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 tap. You can see what happened after each of those taps. Tap. And this recent tap with a marginal new high and negative divergence. So you tapped it here and you put in a marginal new high, which now gives us all the better negative divergence. So I think we'll get a pullback soon. And you also have that high level bearish PPO crossover, just like you had a PPO crossover above the zero line here, 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 and here. And you can see what happened on all of those. So that one looks to be right for a pullback. I'll give you maybe a secondary trend line right here to watch. And target wise, at minimum, look for that previous reaction low here. I'll give you that right now. That'd be a minimum target right there, about 145 200, and then the second target 143.71 or 72, or just what I like to do sometimes, at least initially, trail stop down until watch if you get the anything down here to oversold and or a low level bearish bullish crossover on the PPO. Those will usually do the trick. Okay, so I mentioned lean hogs. This is what it looks like on the 6-month 2-hour candle. Divergent high right there, followed by a trend line break, gives you a correction. You also want to look for these high level bearish PPO crossovers. There was one there, and a trend line break to boot. You need the sell signal. It helps to have a trend line break, divergent high right there, and most recently divergent high. There's your negative divergence, just like you had here and here. And you have a trend line in which to trigger an objective short entry right there. So that is HE. To the best of my knowledge, they do not have an ETF only for hogs or cattle, but you have cow, which I've shared before, COW, that holds both of them, the futures. And then last but not least, I gave you cotton recently, and I want to do an update there. Still looks right for a major pullback. This is a 1-year chart with daily candlesticks. And nope, I just zoomed it out to a 2-year because I wanted to show you this primary trend line here that comes all the way off the lows back in April of 2020. Nice clean up trend line which aligns with my first target, which is also price support at about 10254 right there. You still have that nice clean uptrend line and divergence that's been building. So then we're just waiting for a solid a break of that, and especially a daily close below it. And I have some pretty aggressive targets near term. You probably have a hiccup there, or reaction, I should say, and then take us down to T1 if the trend lines. We're still in a primary bull market, so that may be a final target. and call this T2 potential target. We'll see what's going on with the rest of the commodities arena. Again, it wouldn't, I talked about it before. Powell the easy is definitely going to have to at least raise a quarter point here next month, but would be very impressive because I went over yesterday, showed you what to track with the Case-Shiller house price index, housing index, general commodity ETFs, all commodities as a whole. So I think, and we're seeing there's just zero abatement in the inflation trade right now. It's just not there. And I know Powell the Easy is probably down on bended knee, praying and hoping to see commodities start to correct and ease off. And it's not. So where I'm going with this is, where the commodities go and how much farther there, I do still believe they're in early stage bull market action. So at best, I'm looking for a bull market correction. It could be significant, and I think where I'm going with that is he could, eventually do, become a little more aggressive, a little more hawkish, and maybe do a 50-point hike instead of a 25% hike at one of the upcoming meetings, including the March meeting. I don't see right now the risk of an inter-meeting rate hike because it's just not Jerome Powell. It's not in his nature. The Fed's done that in the past, other Fed chairmen. So we'll see. That's just things to look for. And where I'm going with that is, again, it's going to determine things like this. I'm just showing you a potential target. That's a pretty aggressive target. It's probably not going to hit that in a bull market, but it will, or it could, if the Fed really comes in hard and does a lot to put the brakes on this inflation trade. So I just wanted to mention that there. On the shorter term time frame, let's just look at what's going on. Here's a 60-minute chart of cotton. And BAL, by the way, is your ETN that tracks cotton. You have the uptrend line there, a shorter term uptrend line, and a nice support right here, and that's about 125. You can see there. So you have dual levels, and I love to see dual support levels because if one goes, some people are watching the trend line, some are watching price support. This is where the stops are located on those long positions. So if we break that, it could be a quick swoon down here at about that 118.47. We'll call it 118.50 level. That would be just a near-term target for a quick swing trade on cotton. Oh, and shame on me. I forgot to cover gold and silver. I was going to do that earlier in the video. Let's just do a quick update and we'll wrap this video up. Gold, 60-minute chart, still looking good, still walking up this uptrend line. Big number right here at about 1855 or so. Other than this brief little whipsaw with negative divergence, that level defined a lot of reactions back here. And it's also going to, if we can solidly break it out, it's going to take us above, remember that triangle I've showed you on the weekly chart. Gold's in a big symmetrical triangle on the weekly time frame. You can see that on GLD. I've covered it in many videos recently. So little bit of work to be done, but I still like it very much, and I also like silver. Silver's been pretty strong since its divergent low just a week or two ago, up about 6.5%. And again, I've showed you the levels that we need to take out on the longer term weekly charts, SLV. And a lot of that will have to do with the dollar and the euro. Here's the dollar. Let me just focus on the euro. The euro, I've mentioned some pretty darn bullish developments on the daily time frame recently. This is a 60-minute chart here of euro futures, E7. You took out this downtrend line. Well, first you had this uptrend line that was taken out and back tested, and then very bearish, a big drop there. But then you put in divergent low again on the 60-minute chart here, but much more importantly, we put in a big divergent low on the daily chart. You don't even see it here on the 60-minute chart, much bigger than this. And from there, the buyers just stepped in and chewed it up. So all the euro bears that shorted the breakdown, dollar bulls that shorted that, got smoked, and they're covering now. And so once it became clear, which was right about here, that's where they've just all been squeezed out. And so you have this flagging action going. I'm going to show it on the EUR USD chart in a minute here. You also have an uptrend line to watch. Ideally, your currencies don't always cooperate, but ideally you want to see it stay above that 114. That was big resistance. It was the top of this basing pattern here. We had that little false breakout, that little whipsaw, just like gold, and then a move back down. But we've recovered that line again and we're above it. So ideally, again, in a perfect world, euro remains above 114, doesn't go much below, and this uptrend line, and you get another thrust up here. You break out of the bull flag and you thrust up, and it's going to be a pretty powerful move if so, or at least it has the potential to be. I can't promise you it's going to be a powerful move, but certainly the potential there looking at the charts. EUR/USD, the most salient levels here are the downtrend line, which has now been taken out, and there's that uptrend line that was broken, the quick dump down, but then that put in the divergent low for those that only saw what they wanted to see. They saw the breakdown, and they missed the divergent low. Then the reversal came. That reversal was powerful because it's a false breakdown, aka bear trap. And now there's that beautiful, I mean, that's like a textbook bear flag. Doesn't guarantee it's going to play out, but that's nice. And there's your flagpole. So that would take us, if we break it out, the measured target would take us all the way up here to, this, I'd say that 116-ish to 117-ish level. If that happens, that will almost certainly be the catalyst for the breakout of that triangle pattern in gold. And again, I'm referring to the weekly chart, GLD. Right there, that triangle pattern right there. All right, so that is it. So we're still there. Gold's at resistance. So is the euro. Euro's in that flag at resistance. It hasn't broken out. A lot can happen. It can break out and fail, or it may never break out. So these are the things to watch. So if we can get a nice pop in the next week or so, week or two here in gold and the euro, that could be the catalyst to send up a really nice rally in gold, the gold mining stocks. That goes without saying, GDX, silver, etc. All right, let's wrap it up here, and let me make sure. Let me look at everything. Gas, cocoa, sugar, coffee, cattle, hogs. Yep, I got it all. Okay, guys, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.